Hey guys, so today we're going to be talking about adjusting journal entries, commonly referred to as AJEs and ADMS 2500. So adjusting journal entries is a fairly simple concept once you get the hang of it. So you might be wondering, what is an adjustment entry? So adjustment entries are journal entries that essentially convert a company's accounting method to the accrual basis of accounting. The adjustments are done just before a company releases its financial statements, and what they serve to do is reflect changes in the accounts of a company during the accounting period at the very end. A majority of the time, ADMS 2500 tends to cover these journal entries. They are revolving around 4 or 5 specific categories. We're going to discuss those specific categories, and we're going to lay out some ground rules that specify when exactly those journal entries are necessary. And then later on in the video, we'll cover the types of questions that will come up that require adjustment journal entries on your exams. The most important ground rule to remember is that the adjustment journal entries or adjustments are made at the end of the accounting period or business cycle. So all of the adjustments that you make are going to be made on a date given to you within the accounting case or the question. The date is normally the date that the accounting period ends. So for example, if you have a company whose accounting period ends on December 31st, 2018, then all adjustment entries are made on December 31st, 2018. So adjustment entry questions are usually supplements or related questions to an existing case. So almost all of the time, the questions you are asked are related to a much larger case with many other related questions. Let's get started with the 5 categories that we were talking about earlier. The most common adjustment entries found within this course are prepaid expenses, depreciation, unearned revenue, accrued revenue, and accrued expense.